As I look out the window, I'm happy that our next guest was able to find his way through the fog to get here. What a foggy day! And as I mentioned earlier, maybe it's the fog of an impending election in Nova Scotia or all of the business in Ottawa. But what wasn't foggy yesterday? How's that for a segue?
I like it.
It's like I do this for a living.
I know.
Or
it's like it's one of these ones that you can just like lead right into.
Right. What wasn't foggy yesterday was the Bank of Canada claiming victory against high inflation on Wednesday as it delivered as they've been calling it, a supersized interest rate cut and signaled its policy rate will likely to continue fall in the coming months. That voice you hear, of course, is our mortgage guru, Clinton Wilkins. Clinton, welcome to the show.
Thanks for having me, Dan.
Half a percentage point. You and I kind of talked about this a week or so ago. We kind of thought that was the way it was going to go. They've gone that way, but I think the bigger news is that they're indicating that it's not the end.
It's going to keep on coming. And, every economist was projecting a rate cut yesterday, which was great. I think a little, some people were on the fence whether was it going to be 25 basis points. And there were some of the economists at these big banks estimating even up to 100 basis points for a rate cut. I think at a 50 basis point, reduction, it really signals the optimism by the Bank of Canada that they need to start spurring some spending again. Now, we obviously still want to make sure that inflation is going to remain low, but the real, I think, outcome here, it's going to reduce the cost of borrowing for consumers. Existing homeowners, it's going to make a difference, especially if you're in a variable rate mortgage. So if you have a variable rate mortgage, your payment's either going to go down or your amortization is going to get shorter. Or if you have any products like a home equity line of credit or any other unsecured type of debt, that cost of borrowing is going down as well, which is really great. I think the one thing that consumers need to remember is that fixed rates and variable rates move completely independently of each other. And we kind of need to look and see what happened in the U.S. And I know we operate completely separate from the U.S., but we need to look and see what they're doing and how those impacts are happening. The Fed cut their rate by 50 basis points here not that long ago, but right after that happened, the fixed rates went up by 50 basis points. So I think a lot of consumers have this misconception that whatever happens with the Bank of Canada is going to impact fixed rates, and there's no connection. The fixed rates are really tied to what's going on in the bond market. And let me tell you, there's a lot of pressure on the bond market. And I wouldn't be surprised if our fixed rates in Canada go up as well.
Clinton, about a year ago, you and I were chatting. I think it was on the show, and people were biting the nails off their fingers, looking at these high rates, and you had suggested that if you had to renew your mortgage, that maybe looking at a short term like a fixed rate of 1 year, just to those people looking pretty smart now, considering the amount of reduction in rate we've seen over the last 12 months.
The majority of mortgages are coming up for renewal over the next couple of years. So I think some consumers are going to be renewing into much higher rates than what they had, and some consumers are going to be renewing into much lower rates, which is positive. We were really worried about this renewal cliff that was coming. With this signal from the Bank of Canada, I think consumers are going to be more optimistic and a little bit less concerned going into a renewal type situation. But I really think it's still important to look at, your situation specifically. Everybody's situation is different. Yes, consumers are taking some shorter term fixed. Majority of the ones that are taking shorter term, though, Dan, are like a 3-year fixed. That's probably more popular if you're going to go short term. But now that this Bank of Canada has reduced the key overnight rate, which is going to impact the bank prime, more and more consumers are going to do a variable rate. Right now, a variable rate mortgage is still more expensive than any fix that we can get. But consumers if they can really hold on, those rates will be less in 1 year time. So really, if they can take a higher rate today, it will pay off. But not everyone has necessarily the stomach for that.
And the news yesterday that this isn't the end of it is makes it more lucrative for somebody to maybe consider a variable rate mortgage.
Even when the rate started being cut. So this is the fourth cut, and this is the biggest reduction since 2020. Once the rate started going down again from the Bank of Canada, that signal, more and more consumers were starting to take a variable rate mortgage. I think it's the consumers that are willing to take the risk and can take the risk. Now, not everyone can. Some people, as we need to remember, are at the very top of their budget, and they have to take a fixed rate just to be able to qualify with things like the stress test. But I think the more savvy consumers, and I think the consumers that have some room in their budget, they should and can take a variable. Certainly, it's our recommendation for many customers. Myself, I'm in a variable rate mortgage. We talk about it a lot, even on Mortgage 101. I think it's important to understand the nuances, and every product really is different. A fixed rate's not for everyone. My concern right now is those borrowers that are taking a 5-year fixed, which majority of Canadians historically have taken, 60% are taking a 5-year fixed. those consumers, if they need to break that mortgage early, just think if these rates continue to go down, they could have much, much larger penalties if they break their mortgage early. I've seen, and I've been doing this for almost 20 years, I've seen consumers break their fixed rate mortgages early with $10, $20, $30, $40, $50,000 penalties.
Ouch.
So you need to remember, the bigger the spread between where your rate is and where the rates are, when you were to break it and the amount of time you have left on your mortgage, breaking a fixed rate mortgage early can be really devastating for a lot of people.
Clinton, with money getting cheaper now, do you think that this is going to spur the real estate market in Nova Scotia and in HRM in particular?
I think that there's certainly some positive optimism. I think a lot of consumers were sitting on the fence just because the rates were high. I think the further the rates continue to be reduced, I think there's going to be more and more demand in the marketplace, and I think it's going to drive the prices up again. We're not in this 2021, 2022 era here in Halifax where there was the 20 offers on the properties. We're not seeing that. But I do think that there were a lot of people that were not doing transactions over the last 18 months because they just said, hey, the rates are high, I'm going to wait. Those are the ones that I think are going to start entering the market again. And I can tell you, the activity that we've seen here in October, it feels like it's June. It feels like we're in the summer market right now. And that might just been muted. It maybe wasn't as busy during the summer as it normally would have been because of the rate environment. But I can tell you, it's gangbusters right now. Certainly a lot of people are getting accepted offers. But I feel some people have just been waiting on their mortgage renewals. They were hoping that the rates would continue to go down. But once that renewal date happens, you need to do something. So people, I think, were holding off maybe on doing transactions, and we're seeing all types. Like we're seeing refinances, obviously we're seeing renewals, and people are buying homes every single day. And
the new homes is my next question. And I know you're the mortgage expert, but obviously you keep a pretty close eye on what's happening in the real estate market. I saw some data last week or the week before that single home starts in Nova Scotia are dropping every year, and we're getting more and more apartments onto the market. Take a look around. Well, if it's not foggy, take a look around the north end, and you can see all these buildings going up, and they're not condos, they're apartments. Is it difficult to get a single family home now, and are the prices high because of that?
I think it is challenging. There's more demand in the marketplace than there is supply, and that naturally will drive the price up. That's just the reality. But the more apartments that are being built, Dan, means that there will be more inventory eventually available. Just think about that little old lady and the little old man that really wants to go into an apartment, but there were no apartments to rent.
Right.
So that's part of the challenge. And I think we are just so focused on the real estate being built being unattainable from a price point perspective. Like we're looking at, apartments even next door to the studio, and they're $2,000, $3,000, $4,000, $5,000 a month. We need to remember that the people that are moving into those units are freeing up a unit usually at a lower cost. And it could also be people selling a house to move into these types of units. So all types of construction, I think, are positive at all price points. We just need more units of all shapes and sizes and prices here in Halifax. And we're going to need to build a lot more than we're building right now. We need to be building single family townhomes, condos, apartments. It needs to be of all types of inventory. We need to be doubling, tripling down. And I think some of the announcements from the federal government, it's going to help incentivize builders. And I expect, going into 2025, 2026 and future, we're going to see more involvement from the federal government perspective in the housing market, working with builders, provinces and municipalities to get those shovels in the ground.
Crystal ball question. We know that the Bank of Canada has indicated that we're not done yet. Is there a target? Is there a number that folks in your industry are looking at as where we're going to bottom out?
Well, I can tell you my kind of estimate when the rates were before they even started dropping. I said, you know what, they're going to drop 100 basis points this year and 100 basis points next year. Well, we're already now at 125.
Right.
So it's exceeded my expectation. There are some economists, a couple of the banks came out this week before the rate announcement even happened, saying that by the end of next year, they're expecting like even up to a 200 basis point cut. So certainly stay tuned. I think we're getting into some interesting territory. And right now, mortgages by and large, if you're in a fixed rate, that's probably starting with a 4. In a variable, you're maybe high 4s, low 5s. They're moving in the right direction. But I think by the end of next year, we're going to see a lot of mortgages in that 3% range, which, I think is kind of that balance between being inflationary and, causing that recession. So I think we're going to be in a more balanced environment from a rate perspective. And I think that's going to be positive for Canadians, positive for homeowners, and also positive for people that are getting into the real estate market. As we know, it's been very challenging for first-time home buyers, but certainly some good programs coming out later this year and into next year that I think is going to make homeownership more possible for a lot of people.
Clinton, for those that are on the sideline, maybe now's the time and they want some more information. How do they get a hold of you?
They can check us out online at teamclinton.ca/radio. Lots of great information on there. You and I are doing a show, our Mortgage 101.
You're bringing in the pinch hitter.
I know,
right?
Dan has graciously volunteered to do our kickoff for Financial Literacy Month. November is Financial Literacy Month, and we have a really great show geared up, and it's going to be on the first weekend of November. So I think we'll have a lot of great information on as well.
I hope I can live up to expectations.
I think so. I think you're going to do great.
That's Clinton Wilkins, and Team Clinton is the place to find all that information. Clinton, thanks. We're going to stop down and take another break.